Over the Christmas period, Bitcoin's basically been chopping sideways. Price has been stuck between roughly 85,000 and 90,000, and every time it pushes up toward that 90k area, it just can't seem to get through. That repeated rejection tells you something. There's demand underneath the market, but there's also hesitation overhead. At the same time, Bitcoin is still sitting on what I'd call a fair value zone, with price just above the 100-week moving average. That's important context, because this doesn't look like a market breaking down. It looks more like a market pausing. Now, in terms of my base case, I'm currently leaning towards Bitcoin forming a more durable bottom sometime between mid and late January 2026, and potentially seeing a local top form around March or April of 2026. That view isn't coming from one signal. It's coming from how this cycle has behaved so far. If we go back to early January 2025, Bitcoin topped around the 20th of the month. After that, price didn't immediately collapse. Instead, it formed a low in March, and then a more definitive bottom, a lower low, in April 2025. Sometimes it does exactly what history suggests, and sometimes it gives us a curveball. For example, September 2025. Bitcoin was rallying at the time, and a lot of analysts were convinced October would be strong. They were comparing it to October 2021 when Bitcoin rallied almost 40%, and in October 2017 when it rallied close to 50%, whilst in October 2013 which saw gains close to 60%, so expectations were set. And when expectations get crowded, that's usually when Bitcoin does something else. Instead of continuing higher, price marked a local top in the first weeks of October 2025 and rolled over. On the technical side, the weekly RSI is now sitting at its lowest level since early 2023. That's the same period when Bitcoin bottomed last cycle. And historically, when RSI reaches these kinds of levels, you don't usually get straight line downside. You tend to get a counter trend rally first. If this base case doesn't play out, the alternative scenario is fairly straightforward. One possibility is that price starts moving higher earlier in January, driven by expectations around the new Fed chair. But around March or April, that momentum could fade and the market rolls over. Either way, the key is what momentum is doing under price action right now, because when we shift down to the 3-day time frame, a familiar pattern starts to appear. Price has been making lower lows, but the 3-day RSI continues trending higher. That bullish divergence has shown up before. We saw it in March to April 2025, and again in July to September 2024. In both cases, it didn't mark the end of the cycle, but it did precede meaningful relief rallies. Let me know what you think in the comments. Do you think we're starting to see the early stages of the rally, or do you think we continue to bleed in Q1 of 2026? Market sentiment has been sitting in fear to extreme fear for about 6 weeks. The last time we saw something similar was during May to June 2022. Back then, MicroStrategy was trading between roughly $14 and $26. Its weekly RSI below 30. Very similar to what's happening now. During those periods, MicroStrategy appeared to form a base. And even though the broader market stayed weak, short-term opportunities showed up because positioning had become so one-sided. When sentiment gets this stretched, it doesn't mean risk disappears, but it often means selling pressure starts to lose its impact, which is why oversold conditions can present short-term trade setups. But sentiment alone doesn't move markets, narratives do. And that brings us to the kind of news that tends to surface during these phases. During slow, frustrating market conditions, bearish headlines usually increase. Recently, we've seen reports suggesting crypto treasury firms could face up to $11.6 billion in outflows if Morgan Stanley were to exclude them from major indexes. Another headline warned that Bitcoin could drop into the 70k range, or even trigger a full cycle reset, with downside targets clustering between 65k and 75k. Historically, once everyone agrees on where price is supposed to go next, the market tends to surprise them. That doesn't mean price cannot go to those levels. But it does mean headlines themselves are usually better treated as context rather than as a signal. Which is why, at moments like this, it helps to zoom out. When sentiment feels heavy like this, looking at 5 or 10 years instead of weeks can change perspective pretty quickly. The Bitcoin power law does exactly that. Looking roughly 5 years ahead into 2030, the model suggests a wide range of outcomes. In a euphoric bull market environment, Bitcoin could reach around $1.5 million. In a bearish scenario, price still trends toward roughly $176,000, and the fair value estimate sits around $500,000. Looking 10 years out into 2035, those ranges expand further. At the support line, or in a bear scenario, this price could be at around $600,000. At fair value, this price could be near $1.7 million. And in bull market extremes, this price could be at around $4 million. Those numbers can feel unrealistic from today's point of view, but that's usually because we're so focused on the present. The point isn't the exact numbers, it's long-term view. Bitcoin's long-term value has historically followed a slowing, predictable curve, driven by time and adoption, not headlines. And that long-term framing becomes especially useful when we shift our attention to altcoins. If we take a look at the altcoin season index, this has been hovering in the mid-30s to low 40s range. Historically, we've seen similar lows show up again and again, back in mid-2025, then August into September of 2024. Before that, May 2023, May 2022, and going further back, August 2021 and November 2020, and even earlier, June through September of 2019. The 2019 period is something to keep an eye on because it was when the Fed began shifting away from quantitative tightening and toward quantitative easing, which raises an important question. Does the index need to fall further into the 10 to 20 range before a more durable rally can begin? To explore that, we need to look at the Total 3 versus Bitcoin chart. As we can see on the Total 3 minus USDT minus USDC divided by Bitcoin chart, altcoins continue bleeding relative to Bitcoin. Price is trending toward the lower end of the range near 0.25. At the current rate, that level could be reached by mid-April 2026. My base case is that alts revisit those range lows sometime in Q1 or Q2 of 2026. Before that, I'd expect at least one relief rally as Bitcoin itself catches a bid, because ultimately, alts don't lead, Bitcoin does. Ethereum continues struggling to reclaim the 2025 range midpoint around the 0.5 Fib level. For now, it's holding support in the 2800 to 2900 region. A break below that opens downside toward 2400 to 2500. A break above the support level, as it's doing now, opens it towards the upside to 3300 to 3400 as the next level of resistance. On Heikin-Ashi candles, ETH remains red, with no green doji yet suggesting relief. On the ETH BTC pair, price has been rejected at 0.037 and continues chopping along the trendline from April 2025. A sustained move above that level would open the path toward the 0.043 level. As we look at the Solana chart, Solana looks to be weaker on its USD pair in comparison to Ethereum. For the past couple of weeks, price has been consolidating around the $120 to $126 mark. Loss of support means we go to the range lows, which is set at $95, while the next resistance level is at around $145. As we can see on the Sol BTC chart, the trend remains down, which brings us to the relative comparison between Solana and Ethereum. On the Solana against Ethereum chart, we can see that Ethereum has consistently outperformed Solana since April 2025. Whether that continues into 2026 is something worth watching closely. Now that we've got a sense of which blue chip altcoin may be the strong performer in 2026, the next question isn't just relative strength. It's whether the broader market is starting to bottom, and whether this is the kind of environment where accumulation actually starts to make sense. One of the better ways to assess potential bottoms is through seller exhaustion. Here we've got the Bitcoin Seller Exhaustion Indicator I've developed. We measure how far price has deviated below its 1-year trend and compare that deviation to its historical baseline. When that deviation starts pushing back towards its historical norm, it tells us something important. Selling is still happening, but price just isn't falling the way it was before. In other words, sellers are showing up while they're very low, but buyers are starting to absorb that supply. On the histogram, being above zero tells us selling pressure is present. Tall green bars mean sellers are still in control. But when those bars start shrinking, especially as they move back towards zero, it suggests exhaustion is setting in, and the market is beginning to stabilize again. Buying doesn't usually start immediately, but conditions start to shift, and that's what we're starting to see now. The green bars are shrinking, which tells us sell exhaustion is fading, and stabilization is starting to take hold. That opens the door to further buying in Q1 of 2026, assuming we don't see another black swan event. Something like the yen carry trade back in early August of 2024, where forced selling briefly overwhelmed the market before demand stepped back in. Now, when selling pressure begins to fade, the next thing to check is whether participation is also drying up, because bottoms don't form when everyone else is active. They form when interest disappears, and that's where exchange volume comes in. If we take a look at the daily exchange volume, we can see that it's fallen sharply. Right now, it's sitting around the $26 to $28 billion range. Those are the lowest levels we've seen in 2025, even below the levels from July. That tells us something simple. Market interest is low. And historically, that's often what the environment looks like before a reversal begins. At prior bottoms, like March to April of 2025 and August to September 2024, volume compressed first, before expanding again as price turned higher. So once volume dries up, the next question becomes, where is capital flowing from into the crypto markets? And that brings us to ETF flows. ETF inflows and outflows can be useful as a contrarian signal. When ETF inflows are hitting all-time highs, it usually means optimism is already priced in, and those periods often align with local tops. On the flip side, heavy outflows or apathy tend to show up closer to bottoms. If we look at Bitcoin spot ETF inflows, the pattern becomes pretty clear. There was heavy selling through late October into November of this year. Then, as we moved into early December, that selling slowed, and small inflows started to return. We've seen this setup before. Back in March of this year, ETF inflows were also relatively light. There was some buying, but it wasn't strong enough to confirm a swing to the upside. Instead, the month of March was followed by another washout in April, before Bitcoin finally began to rally through May and June and carried higher into August. ETF flows don't tell you timing precisely, but they do tell you whether positioning is crowded or cleared out. Now, beyond capital flows, it also helps to look at what's happening on chain. If we look at new users on the base chain, we're currently sitting around levels last seen in May of 2024. What's interesting here is that user activity has formed higher lows. It's now above the levels we saw during the August 2024 yen carry trade event and the April 2025 tariff-related fears. This shows us that overall, retail interest is relatively low, because periods of high retail activity tend to align with market euphoria. Low activity, by contrast, often shows up closer to periods where whales are waiting or tend to accumulate. Historically, price often rallies after new user growth compresses toward range lows, which suggests the market may be in the early stages of bottoming and slowly positioning itself for the next move. From here, the next piece of the puzzle is where sideline capital is currently sitting, and that brings us to stablecoin dominance. Stablecoin dominance is now at its multi-year resistance zone. On the weekly RSI, it's trending up toward the 70 level. The last time we saw that, back in June 2022, stablecoin capital eventually rotated back into the market and fueled a rally. However, there's an important detail to watch. In November 2025, stablecoin dominance wicked up toward the 6.75% region. When we see wicks like this, price often revisits those levels before reversing. We've seen that behavior before, notably in March 2025 and August of 2024. Using Heiken Ash candles, we're still waiting for a red doji to appear. Historically, red dojis have marked early signs of downside in stablecoin dominance and upside for risk assets. Similar setups occurred in June of 2022, when RSI pulled back toward the 50 range, and in March 2022, when the RSI moved closer to 40. And if this is a bottoming process, then macro conditions become a key variable from here. Looking ahead to 2026, the markets will be pricing in a 85% chance that the Fed holds rates steady. Roughly 2 rate cuts are currently expected over the year. Those expectations could change once a new Fed chair is appointed in Q2 of 2026. When we overlay the Fed's balance sheet on the Bitcoin chart, we appear to be entering the early stages of quantitative easing. As we can see, the Fed's balance sheet is starting to rise, similar to what we saw in 2019. Back then, Bitcoin made an all-time high roughly 14 weeks before QE fully accelerated. Projecting that forward, a similar window points to early January of 2026 as a potential bottoming zone. That said, Bitcoin likes to give us a curveball each year. So, a bleed into late January or early February remains a valid risk as a worst case scenario. Overall, while I remain bullish on Bitcoin and selective blue chip alts in the long term, short term, I'm still cautious over the next couple of months. Whether Bitcoin makes a new all-time high or rolls into a lower high rally depends on how monetary policy evolves over the upcoming months. And right now, the Fed is still keeping interest rates relatively tight. Over the far future, I remain bullish on Bitcoin through the power law lens, and I plan to use time as an ally rather than chase short-term certainty. Let's go ahead and wrap it up there. Thank you all for tuning in and for your support on the video. Shout out to all my daily grinders out there and hope to see you all in the next one. Peace out and stay based.